Good evening, ladies and gentlemen. My name is JT. I want to thank everybody that's with us in this meeting today. Notable mention to Akshay Grover, who's going to be one of our speakers, Frank Mwiti, who is the CEO of Nairobi Securities Exchange, and Kariuki Gathitu, the founder of Quikk API. I believe that today we are surrounded by a lot of greatness, people who are doing great things in different markets. And this webinar is here for us to share, to have an interaction, to engage, and see how best we can talk about capital markets and how it's a benefit for the different parties involved. With regards to whichever industry you are, I can see there's a lot of people here, and this is a very great session. So I'm very happy to ask our guests that will be turning on your cameras as we are about to begin. So I'd like to start by introducing myself. My name is JT Muga. I'm the growth lead at Quikk API and also the growth lead at Forge Marketplace. You might be asking yourself, what is Forge Marketplace? Well, it's basically a one-stop shop for any developer, any person in the tech industry, a tech founder, anybody interested in tech at large. That's where the world is going. So it's a one-stop shop for people who want to connect directly to APIs. It has an events dashboard as well. And the platform also allows 75 already listed products to engage and access each other directly. It has a media side and it has a business side. We have not yet started focusing on tapping onto the financial gains. We're not looking at that right now. We're just trying to create a community as of now and make this platform as good as it can become, which means it's going to power conversations like this. Broadcasting, what deals are being done in tech and how beneficial that is to the ecosystem. I'd like to start by introducing Akshay Grover, who is someone that I have complete trust in and believe that whatever he is doing is very great and has been doing some amazing stuff with the company that he's just founded. Akshay Grover is a Thai president, TIE Africa, which is the African chapter, which is an angel investment firm within Africa. And at large, it is in probably 11 chapters across different continents, has done over 7 billion in terms of investments into the entrepreneurship ecosystem. He is also the founder of Amadi, which is an advisory and special situations firm in Africa. He was the group CEO of Cellulant and led Pan-African fintech and payment platforms for across 18 plus African countries. He was also the CFO before he became CEO of Cellulant, and prior to that, the senior executive was one of the CEO have you here. That was your introduction. Also, I would like to introduce the one and only Mr. Frank, as you can see him here, who is currently serving as CEO of the Nairobi Securities Exchange for the past 1 year and 4 months. Was also partner and market leader at Ernst & Young, where he served Kenya, Ethiopia, Uganda, Tanzania, Rwanda, Burundi, Somalia, and South Sudan. Before that, served in senior executive positions in the financial services sector in the UK. So we can talk about UBS, Investment Bank, Deutsche Bank, private equity houses. My break. Okay, my bad. I was breaking. So to do an introduction for Kariuki Gathitu. I don't know if everyone can hear me clearly. Akshay? Okay. Finally, I do an introduction for Kariuki Gathitu. He started his career at Equity Bank, did an ATM logging programming interface and displays, developing M-Casho. Was very successful at that, and decided to start his tech journey in entrepreneurship by founding Zeket Technologies, which was a mobile money and financial solutions platform. He then built Empire, which won awards in Africa, mobile management, money management system integrating systems like M-Pesa, Airtel, and even Cash. He also is a youth and entrepreneurship advocate for the African Union and the World Bank. He is currently the founder of Quikk for developers. Gentlemen, I'm very happy to be here with you guys. We have 48 people. We should be having more probably, but it's always great to have a loop of people who we can talk to and align with. Mr. Frank, welcome. We could not have done this without you, and we're very grateful to have you to be in your presence. Sir, kindly, if you can say hi to the people.
Thanks for having me. Good evening, everybody. I think you've done a wonderful job introducing all of us. I'm definitely glad to be here. More importantly, these are the sort of conversations that the new NSE, if I were to put it that way, wants to be part and parcel of, given the huge changes that are buffeting our ecosystem. Both in terms of the rapid change in technology, as well as the huge demand from various service providers for us to have more streamlined digital offerings. So I'm looking forward to this conversation. And for us, maybe as a very high level, for us as NSE, what we are starting to view ourselves as is as a technology business that is offering capital market solutions. So if we position ourselves as such, it means that we really do want to also work very closely with both technology leaders, startups, of course, financial services partners, etc., to really make sure that we can unlock value for our market and also learn and collaborate with others. So I'm looking forward to the conversation, but more importantly, also to pick up some lessons from here that we can then go on to implement and improve our market. Looking forward to the conversation. Thank you. Back to you.
Fantastic. Akshay, the floor is yours. You can share a word with the people.
Good evening, everyone. Thanks a lot, Kariuki, JT, for the opportunity. Appreciate it very much. Frank, good to see you after so many days. And everyone, I think I run a advisory and special situations firm called Amadi. We focus on raising capital, advising people on growth strategy, on monetization from private equity, venture capital funds, as the case might be. And we also look for situations where we can create disproportionate value. So we look for businesses that have an opportunity to be restructured, or there is a unique situation surrounding that business. We typically come in with both capital as well as our operating experience, try and restructure the business, put it back on a growth path, and try and create value out of that. I think this is a superb conversation to be having and very, very timely because, you can see a lot of private capital having come into the continent over the last 5 or 6 years. And the unique thing about capital coming in is that it needs to find a way to go out. So capital is always in a cycle, and cycle means that some investors want to come in and at the same time some investors want to get out. And it's very important for us as governments, as proponents of increasing capital, is that we have to find ways and means of creating pathways for investors to exit. Because if we don't find pathways for investors to exit, they're not going to come in. And more will definitely not come, right? So I think this is a superb conversation to be having, and I'm really glad that Kariuki and JT and the rest of the team that have put this event together are doing so in order to be able to have the right conversation with the right people in the room, so that we can do something together about it.
Thank you, sir. Kariuki, on to you.
Thanks, JT. Yeah, this is really remarkable for us to get to this place. We've been speaking about the capital markets and trying to figure out what the opportunity is. And I know that Frank and the team are like looking into retail, the retail space, getting more people trading. And for me, I asked myself, so we're in this space, this technology, what do we need to do to get to that place where we have increased the number of people who are trading on the NSE, understanding that the NSE is actually a viable opportunity. So like I've been in the NSE for quite a while, but at some point, I kind of stopped doing direct trading because for whatever reason, I think a lot of people got onto the NSE during the Safaricom IPO, the Kenyan IPO. And then after that, I think what's dominated are the money markets. But with the landscape as it is right now, I think it's a good time to step on the gas with regards to technology and injecting technology into the markets, so that these products can be ubiquitous, pervasive around the economy. And that's where we come in as technology providers. We provide APIs for providers. We connect service providers with people who are building fintech solutions, because I believe that developers are the ones that will unlock this opportunity. So even in these discussions, what I really am passionate about is getting somebody who is thinking about building a Robinhood, thinking about building an analyzer of sorts, and giving them the capability to actually move money and also understand the insights around the exchange and building something that can really push the market forward. Yeah, so I'm really happy and glad to be here, and I can't wait to hear the discussions.
Thank you, sir. Well, ladies and gentlemen, everyone that is here with us today, the topic is capital markets as catalysts, and building Africa's innovation infrastructure. I would table this as everyone is doing that in their respective fields. Everyone is trying to do that, but it's tailored to different markets in different ways. So I'd like to ask Frank, you mentioned that you're trying to venture into the retail space, the retail markets. Maybe you have already. Maybe I would ask, as NSE looks to expand its retail participation, what specific innovations or partnerships do you believe will effectively unlock access for Kenyans everyday investing?
Thanks for that. The way I would want to respond to this is to first start by sharing the highlights of our new strategy, and how that then leads to the retail conversation, and more importantly now a better, I guess, clearer response to your question about tech. So we have a new strategy at NSE for the 2025-2029 strategy period. It's a strategy that we developed in the course of last year, and our board approved it in last November. So as you can imagine, we are already 7 months or plus into implementing this new strategy. So what is the new strategy? The new strategy speaks to three strategic objectives. The first objective is we want to revitalize our markets. And I will come back to what that really means. The second objective speaks to harnessing technology to achieve our stated objectives. And the third objective is more inward looking. It speaks to the need for us to optimize our organizational effectiveness as an entity. So let me speak to revitalizing our markets, because that's where really the rubber meets the road. So, under revitalize our markets, what we looked at is first of all, what's been ailing the market for a few years back. Why have we not had an upsurge in trading? Why have we not had listings for a long while? What is happening with other exchanges around the world? Who is investing in what in our economy and beyond? And how do we become relevant to our part of the world as an exchange? What we zeroed in on is the need for us to enable retail investors to access and trade our markets. I think somebody's not on mute.
All right, I have muted. One second.
Shall I continue?
Yes, please.
Okay, thank you. So under revitalizing our markets, our key focus is to enable retail investors to access our market easily, to be able to do so ideally at lower and lower costs, and to be able to interact with products that don't require a lot of technical know-how to be able to actually, trade those products. And we have a fairly large, big ambition around that, which is to have 9 million active retail investors by the end of the strategy period, which is 2029. Our retail investors for us are both the domestic investors here in the country, as well as the diaspora. So that accounts there are ways to keep them. I think you as the admin will have to navigate the hygiene of the session. So we want to have 9 million active retail investors by the end of 2029. And to do so, we are going to rely on technology, particularly mobile technology, to make that happen. That means that we have to be able to enable my brother in my village, somewhere in rural Kenya, to access our markets easily and without a lot of friction. And the biggest friction right now is that we don't have very frictionless mobile apps and other online platforms for retail investors to come to our market. We do not have a lot of financial literacy and investor education programs that are available to the masses. We also have, for a long while, been seen as a sort of elitist marketplace that is only available to those who have a lot of funds. So I will give you a good example of some of the reforms we're doing beyond tech. As of Wednesday last week, we changed the rules in our market to enable investors to actually buy just a single share. In the past, it used to be you have to buy a minimum of 100 shares of any given counter, which meant that you really needed to have a tidy sum of money to be able to participate meaningfully in our market. We've removed that. That means if you have today, as we speak, given some of the prices in our market, even with 2 shillings, you can actually participate in our market. And we think that is a good place to start. I make the market accessible. But from a tech perspective, what we want to do is to actually collaborate with partners like yourself and a lot of the guys on this call today. And one of the things we are doing with that regard to make that a reality is we are upgrading our market infrastructure. That is one of the biggest programs we are doing this year, to upgrade all our trading systems to be more modern, so that it's easier for you to, for example, connect to those, pull in data, use that to build apps that then speak to our systems, etc. That's one of the things we're doing. Now, number 2, we're in the process of setting up an NSE innovation lab that will want to collaborate with the likes of the guys in the audience today, so that they can come, first of all, understand the capital markets in a lot of detail, and then be able to build solutions in a curated environment. And I don't mean a sandbox, I mean a lab, in a curated environment, so that then after that we can enable them to commercialize whatever solution they're coming up with, as far as the capital market is concerned, and of course more specifically the NSE as a marketplace. Lastly, is to say that we plan to roll out aggressive campaigns around other aspects of our digital journey, and we think that partnerships and collaboration will be one of the ways that happens. I think you will also have seen that we have indicated that we are embracing tokenization as a theme, including having played a significant role in pushing in contributing to the proposed virtual asset service providers bill that will bring into our market, at least under regulation, things like stable coins, crypto, tokenized securities, probably CBDCs, etc. And to the extent that those are relevant to the capital markets, NSE will definitely be open to that and be part of that. I think what the audience should see NSE as is a new NSE that is open, that is willing to collaborate, that is wanting to be a leader as far as matters digital infrastructure is concerned, while doing that in an environment that is obviously relevant to players that we support, whether those are investors, whether those are listed companies that are raising capital from our market, or in fact, some of the regulators that we interface with. And lastly, as I conclude, I want to correct Kariuki that I don't know whether you've seen, you've been following the market a lot more closely these days. Last year, the NSE was ranked the best performing exchange in Africa by Morgan Stanley. This year, if you saw today's headline on the Business Daily, we are up 1 trillion shillings. That's $7.7 billion that we've added since I joined the NSE. So no, I think Kariuki needs to freshen up on the numbers. Thank you.
I definitely do.
So thank you so much for that. Always get a lot of energy once I have a conversation with you. I've taken a few pointers from what you just said, from your strategy. One is that you're trying to lower barriers for entry as you try to tap into different markets. Second is new retail-friendly products, probably in the future, I believe. That is creating financial literacy and awareness in what you do, and also technology accessibility, basically. And basically developing this trust and transparency, which avenues like this provides. So yeah, that's very insightful, and I think we'll get back to you. So I still have more questions. I know you had 30 minutes. Itabidi tuongeze. I'd like to move over to Mr. Akshay Grover. So I had a few questions for you, judging by what you do and how you plug in here. Given your experience in scaling fintech across Africa, what do you see as the biggest opportunities and risks in bringing retail investors more deeply into Kenya's capital markets? I can repeat. Given your experience in scaling fintech across Africa, what do you see as the biggest opportunities and risks in bringing retail investors more deeply into Kenya's capital markets?
Yeah, a great question. And, by the way, Frank, I love the strategy points that you talked about, because I think they hit on the core of the issues that I think we are facing. So I'm so happy to hear what you talked about, and, looking forward to some of this translating into action and reality in the coming weeks and months. And very happy to in any way support what NSE is trying to do in Nairobi. But I want to, JT and everyone on this call, I want to step away a bit and just share a personal anecdote before I respond to your question, because I think it might be relevant to all the young people here.
Yes.
At the age of 24, which is not too long back, I'd like to think, I got my first job in Mumbai, and the first thing I did about 21 years ago was to open a bank account, because you needed a place where your salary would get credited. And the banker was selling to me that you should also open a trading account on the Bombay Stock Exchange. So he gave me a wad of paperwork, which I blindly signed, and I opened that demat account, not knowing what is equity trading or anything like that in my life. And then I started working, but because the work days were 17-hour days, there was no time to trade. Finally, a time came when I didn't have any projects to execute. And my manager told me that you are on the bench. So I said, good. I started coming every day to my office, and there was nothing to do morning to evening. I had a close colleague of mine who had started experimenting with trading on the Bombay Stock Exchange. And he was reportedly making in those days 3,000 Indian rupees every day. So I was like, shit, man. I barely earned 30,000 after slogging my entire month out. This guy's making 3,000 bucks a day. That's crazy. I got to start doing this. So I started investing with the idea of making money overnight. And actually, because the stock markets were so good those days in India, I made not three, I made 5,000 every day. So I was making more money on the stock exchange than I could make in 5 months in salary. Long story short, I then lost a ton of money. Everything that I invested. Yeah. But it taught me a very important lesson that the only way to make long-term wealth and a sustainable way is actually equities. If you Google anywhere, what is the 20-year equity return versus the 20-year bond return versus the 20-year real estate return versus the 20-year gold return? I mean, the only thing that might beat it, I think, might be crypto. Other than crypto, equity will make you more money than anything else. Now, why did I talk about this? Is that it's the only way long-term wealth can be created. So that's point number one. It doesn't matter whether it's Nairobi, whether it's India, whether it's China, whether it's Indonesia, whatever, right? But we have some fundamental challenges which we need to understand and recognize, which are macro factors which affect stock exchanges. So let me give you an example, and that is basically depth of the market, right? India's GDP is roughly $4 trillion and stock market capitalization is $5 trillion. So it's 1.2 times GDP. America's GDP is roughly $30 trillion and its stock market capitalization is roughly $60 trillion. So it's twice the GDP of the country. I don't know if any of you know, but any guesses what is Nairobi or Kenya Stock Exchange versus GDP of Kenya? It's roughly 1/5, so 20%, 0.2x. But that's not the point. It doesn't mean it's bad. The interesting thing is that when you go to even a place like South Africa, it's lower. When you go to a place like Nigeria, it's lower. So what does this mean? That there is not enough depth in the market and there are not enough participants in the market. Yeah. And because there are not enough investors in the market, ironically, there are not enough people listing in the market, right? And so the question is, therefore, so it's kind of like a chicken and egg, and you are in that cycle because you can't really change that cycle very, very quickly. Yeah. So I think to kind of say that from a tech point of view, you had a question coming back to your question, JT. From a tech point of view,
Yes.
if you look at it,
Yes.
I don't know any large tech company that is
Yes.
looking to list on any stock exchange in Africa. So Flutterwave, we all know Flutterwave. Yeah.
Yes.
We all know MoneyPoint. We all know the large tech businesses on this continent. Have you heard
Okay.
anyone is wanting to list in any African country? It's not about Kenya. I'm now going pan-African. Anybody wants to list in Egypt? Anybody wants to list in Nigeria? Anybody wants to list in Johannesburg? Answer to that question is nobody wants to list. And the reason for that is very simple.
I get you, sir. Okay.
The
Yes.
reason for that is that there are not enough investors that understand these business models at the depth and breadth which they should. So do you understand a business model which makes, for example, a loss at EBITDA and is still very valuable? Yeah.
Yes.
Uber, for example, was loss making for for several years after it got listed. It's only recently that it turned positive, right? Yet it had a very large market capitalization, $40 billion, $50 billion, $100 billion, $200 billion more, right? And so the issue that we have is partly about who is participating in the market,
Yes.
but partly about also investor education.
Yes.
Do you think that the pension fund of Nigeria will invest in Flutterwave? I don't think so.
Probably not. Yes.
Nigerian company, but it won't.
Yes.
So I think we have also got some challenges around policy and policy initiatives. Yeah.
Yes.
So some emerging markets. Sorry, let me just pause there. I think JT wants to come in.
Sorry? No, I was just go on, sir. Go on, sir. Knowing you, I know numbers drive you mad, and once you start, you don't stop. So please share with us your genius. Feel free to continue.
So I think, yeah, I don't want to make it a long monologue, but I think the long and short of what I'm trying to say here is that if we want to do this, we've got multiple pockets of work. We've got
Yes.
a pocket of work where we say policy and government. So can the government impose a policy which say that all pension funds have to invest 5% of their capital into tech? Yeah. And not a large. So you don't want to destroy people's pension money, right? But that's why you say the limit is 5%. Yeah.
Yes.
Or 2% or 1%. I mean, I don't know what that number is. Somebody will come up with a number, right? The point is, what is the policy measure to inject local capital into businesses? That's question number one. Question number two, can Nairobi Stock Exchange is market cap, I'm not sure, maybe it's $25 billion. I don't remember the number. But can Nairobi Stock Exchange be a stock exchange which can list a company in Tanzania? Can it be encouraging
so be live in different markets across Africa?
Yeah. So can a startup out of another country come and list in Nairobi? That would be fantastic. But you know what that needs? It doesn't need just stock exchange. The biggest problem it needs to solve is Mr. Kenya Revenue Authority.
Yes.
Right? So, and tax laws. So how I mean, Kenya Revenue Authority, Kenyan businesses are scared of KRA. So what will Tanzanian guy do? No, he cannot list here, right?
Yes.
Because your tax structure in the country also needs to enable a listing for it to happen. Yeah. A Tanzanian company might have a Ghanaian subsidiary, a Kenyan subsidiary, a Nigerian subsidiary, a Ethiopian subsidiary, and it wants to list the holding company. How do you make that happen from a tax point of view? Very challenging today. There's no African market which has solved this. Leave aside Kenya. This has not been solved by any market. In fact, I don't even know if it's a focus for any market. But if you meet focus and you decided that I want to be the regional stock exchange, let's not say for Africa, let's say for East Africa to begin with. Yeah. Then can I compete with the Tanzanian stock exchange? Can I compete? Can I take away their listings and bring them to Kenya? That can increase depth and breadth. Because no matter what we do, we cannot fight that we are a 100, 110, 120 billion dollar GDP country, right? So our best case stock exchange, if we are comparable to the rest of the world, to the good emerging markets, our market cap will be 100, 120 billion dollars. That's the best case. And that we are far away from right now. But the point is not that. The point is, how do we get there? So let me pause there.
Okay, thank you so much, Akshay. Frank, I've seen your videos come back up. I think you wish to respond.
Yeah, let me clarify some things, because I think I can see what Akshay is saying, but some of the points I think are not actually factually correct. Let me start by saying that cross listings are happening across different exchanges in Africa. In fact, here at Nairobi, we have inbound cross listings to us from Tanzania, for example, from Rwanda, for example, Bank of Kigali. And we also have Umeme from Uganda. And then KCB and Equity are cross-listed to a number of the exchanges in the neighboring countries. Beyond that, of course, there are other aspects to consider. So, for example, I will say, let me use a concrete example. NSSF in Uganda, the equivalent of NSSF in Uganda, which is actually called NSSF Uganda, is one of the biggest institutional investors in NSE. There's a reason for that. I think what that tells you is that capital will flow to markets where both the reward and opportunity exist. The other point I think to mention is that you might be aware of something called NIFCA, the Nairobi International Financial Center Authority. In fact, the essence of NIFCA is literally to host three entities. It's to host holdcos, so holding companies. It's to host regional entities, so entities that are doing business ideally across Africa, but holding their presence in regional headquarters in Kenya. And the third bit that NIFCA is about is startups. It actually has very, very preferential incentive structures for startups. Maybe in the next session I can assist you to invite Daniel Mainda, the CEO of NIFCA, to actually unpack this for your audience. So I guess part of it is about awareness. That said, it is true, to Akshay's point, that there is still a lot of work to do to consolidate some of the successes we've had and to also deepen our market, including, to Akshay's point, being able to enable, for example, Africa-based technology businesses to actually list on exchanges in Africa, as opposed to going to foreign markets to seek either liquidity or exits. The other thing I think that is also important to mention is that for a long time, the category of private equity, venture capital, startups, potentially even SMEs, have really been locked out from the mainstream capital markets. What that has meant is that you will not readily find venture capital VCs coming to talk to NSE about exiting their portfolios through NSE. Similarly, having PE firms coming to talk to NSE about exiting their portfolios through NSE. And for that matter, startups coming to NSE seeking to use NSE as a platform to raise capital. We are changing that. I guess part of the reason we're on this call is because this is a new NSE. We are changing that. And I think the way to change it is to take feedback, for example, that Akshay has shared, and say, how do we take that feedback and make it a reality? How do we influence both policy? How do we influence regulations? How do we influence tax laws? How do we influence the sort of market regimes that we will have in place, so that we can actually onshore these opportunities on the continent, as opposed to them going to other markets? But it is also true to say the bulk of startups, if I speak to startups, the bulk of startups in Africa have actually been funded by Silicon Valley and other foreign capital. So probably it is right that they also harvest the premium in their markets. So it means we need to reverse something, which is, can we create a localized VC angel investment class in our markets. So that then there is no reason you should do a startup in Africa and then go harvest the premium outside the continent. If we are not part of the guys funding them, how do we expect to be part of the success story? You know?
So
I remember you make a brilliant point there. You make a brilliant point there, which is about accessing local capital, not for IPO. You can only do IPO. First, you have to do the let's call it intermediate rounds, right? Before you can start doing IPO acceptance. But I also think, Frank, you see, there's another big advantage which we as local capital providers have. I don't think the local providers of capital have been educated to that extent, right? Or maybe they are still risk averse. Could be combination of the two, right? But you see, one of the biggest things that's happened, and Africa has suffered with this, that Silicon Valley disappeared for the last 3 years, 2 years. Why did Silicon Valley disappear for the last 2-3 years? Because capital became very expensive. A US Treasury bond was 4.5-5%, right? And suddenly valuations of US companies and European companies fell massively, right? I'm not talking about Google, Microsoft. I'm talking about the private market, right? And when that happened, the Silicon Valley venture capital and private equity investors realized, why spend time and energy trying to invest in Africa when you are getting everything for half the rate in the US and US dollar denominated? So all the capital went away. And we saw a lot of news items, I don't know, in Kenya, oh, this startup shut down, that startup shut down. Why did that happen? Because that capital went away. And we have no domestic source of capital. No, we have source of capital, but we don't have people ready to deploy that capital. Let's put it that way, right? But if they were ready to deploy, they would get fantastic deals, fantastic opportunities, good businesses. Many good businesses have shut down simply because they didn't have access to capital at the right time.
Thank you. It's called feedback. It's the nature of conversation. So thank you, gentlemen, for that just now. Although I'd like to also proceed to the first question for Mr. KG, Kariuki, Gathitu. So you already introduced yourself, so I'll also just move on. From a technology and integration perspective, what do you see as the most effective way to lower barriers for retail investors to participate in NSE products?
Yeah, thanks, JD, for that. I think, can you hear me?
Can I repeat, just in case I was being told it hanged? Okay, let me just repeat, just in case. So from a technology and integration perspective, what do you see as the most effective way to lower barriers for retail investors to participate in NSE products?
Thanks, JT. And I think that's a very important question because it is the answer to which is a catalyst for what's next for the NSE. I love the era that the NSE is in. As Frank said, the new NSE. I remember when I started trading, used to go to the broker and it was a process getting a CDSC account. And then we only had, I think it was a business daily to kind of tell us which shares to buy. And we were a bit naive trying to figure out, okay, so should I do this? There was agricultural and banking and all those sectors. But I think over time, what has happened, and we've seen it in other industries, technology has revolutionized those industries. I would say, for example, where I'm in, fintech with M-Pesa. Before 2010, you could only send money to your uncle and back, right? Until we built an API that was opening up M-Pesa to the online market. For the first time, I could deposit my M-Pesa and it would show up in my bank account. I could buy something on an online shop and I could figure out how to send a package to my brother in Nakuru online via M-Pesa. But tracking back, you have to ask yourself, so how did that happen? And I think what happened was that there was a huge need, like it was bursting. People wanted to do this thing, like, can you give us the ability to connect with M-Pesa? And tech came in. We brought up an API, then there was some work around developer ecosystem. And now it's probably 10 years back, 10 years from that time. And you've seen the transformation that M-Pesa has had just because, and I think it's totally on the backs of developers. Yes, there's the marketing. Yes, these are the arms of business. But without developers, I do not think M-Pesa would be where it is right now, as this thing that is so great. And so not just that, it has opened up the VC space. It has opened up other spaces. I mean, like Kenya is one of the most funded countries in Africa. We are one of the top 4 countries, together with Egypt, South Africa, Nigeria, that receive funding from all over the world. I'm trying to connect this story to the fact that I think the NSE is at this point where you have revitalized markets, like Frank said, like we don't know, and we don't know that the market is doing so good that it's something that we could put our money into, right? When I have like 100,000 shillings and I want to invest it, the first thing that comes to mind is, plots, or let's put in an MMF, which is a mixed fund of sorts that gives you maybe 12, 13% yield, 14% yield. But as Akshay said, the best investment that you put for your money is actually in equities, because equities is solid and it grows steadily over a period of time. And so when I look at technology and enabling technology, I think about enabling technicians or developers, the people who I personally represent, the people who come to me and they're like, hey, we want to do this thing with the NSE. They talk about products like the Robinhood, XNES, all these stock products, trading in crypto, trading in actual assets, digital assets, trading in equities. And we ask ourselves, so why can't we do that, right? And obviously, there is a roadmap to making things better, reducing the barrier to entry for a developer to connect with NSE. But I think that's the main thing that needs to happen. And we've seen it in betting, like betting. I think from my research, they did in 2023, it was about 4 billion, which came to about 10 million shillings a day being traded or being betted on the betting platforms, which tells you that there is money to be spent. Betting is gambling, and I don't know if Frank would allow me to say NSE is also somewhere on the line of betting and gambling, but it's sure bets, right? It's not pata potea. And moving that conversation from
there's
who has
a famous saying
100
in
bob.
Kenya.
Sorry,
There's a famous saying in Kenya. It is easier to start betting than it is to open a demat account and trading on NSE.
Exactly. That's what we need. And I think Frank has alluded to the fact that is a core tenet of the NSE, reducing the barriers to entry, the miniaturizing the shares from 100 shares minimum to 1 share, from the capital requirement, but also the speed of accessing an account, right? He talked about tokenization, and these are all things that I'm really excited to see happen, right? And be a stakeholder in driving it, driving that success. So to answer your question in whole, I think developers, and there are many developers on this call, very many developers. Right now I'm at the Antler, where it's a VC firm, it's a VC accelerator that harbors many developers who are really top of their game in building applications and financial services. And so we are hungry to connect, and we are hungry to connect to people who think big, like globally, building products for Africa. So once we're able to support those who unlock the opportunity, then it's a multiplier effect that is absolutely incredibly, and realistically, I would say I can't even imagine what you would do if you give developers this access. They would do unimaginable things. Yeah. So thanks, JT. That's my take.
Fantastic. I'd like to say that what can be achieved by all parties if everything is done well and precisely is just as you said, as you talk to Frank, you realize he has a go-getter mentality that is very, very, very visible. As you talk to Akshay, you realize that he has that mentality as well. As you anyone, everybody hear me? Kariuki? Okay, we're back. Okay. Yeah, so I was saying that as you talk to these three gentlemen, you realize that there's a mentality that is there. And with that, you can achieve many great things. So just happy to be around these gents doing great stuff with regards to their jobs and their daily lives. Now, I'd like to proceed to the second question. Frank, if you're ready to go ahead, unless you wanted to respond again.
No, let me take the next question, because I also will have to beg leave in the next few minutes, please.
Understood. What role do you see financial literacy and digital platforms playing in building long-term trust with retail investors? And how is NSE positioning itself to deliver that?
Thank you for that. And while KG was,
so sorry to cut you short, sir. Also, just based off what KG had said, people do tend to go to other security exchanges. People do tend to invest in different things or bet other than go to the Nairobi Stock Exchange and put in their money. My question would be, just on top of this, why NSE? Why should people consider NSE, especially the retail market today?
Okay, thank you for that. And as KG was speaking, I also tried to respond to some of the questions that are in the chat, but what I can commit to, because I will need to drop off for another call in a few minutes, I'm happy to take all these questions that are in the chat and respond comprehensively through yourselves, and you can share it with the audience. But getting back to your two questions around financial literacy, digital platforms, and why NSE. So let's start by saying that as an exchange, the primary exchange in East and Central Africa, we cannot say we are relevant if the bulk of our populations are not participating. And the premiums that are being harvested through our markets are exiting the continent. It just means that we're not relevant. We've got it wrong. So the issue about financial literacy and investor education, focusing on retail investors and our local populations, is so that we anchor our exchange in our own populations. And if you look at the example of India that Akshay has made, which has seen tremendous success mobilizing retail, it's because it made a strategic decision to be relevant to its own population first, and not to rely on foreign capital as the major constituency to drive volumes and opportunity in our market. So we know we have to do it because we want to have a more stable market and deeper capital markets, and that has to be local investors. In fact, when we've gone for international roadshows, that question keeps coming up. What percentage of your market is driven by local investors, and what is the split between institutional and retail investors of that local component? It's a big metric that is important to track, and it shows the health of the exchange, because if you build an exchange that is overly reliant on foreign capital, whenever there's a headline, capital flees because it is not domestic. Now, financial literacy and investor education, therefore, are one of the key tools to deepen local participation. Our intention is to climb out of our, let's call it ivory tower, and push out what I think young people would probably call NSE machinani. We need to take the market to the masses. That's where actually opportunity sits. In order to do that, we have to interface with the retail investors through platforms that they trust. Those, for example, could be maybe they use their mobile phones to access information, to access knowledge, to build their own understanding of the opportunities that exist. Maybe it is working through other entities they trust. For example, our research has shown that a lot of retail investors trust SACCOs. They work with SACCOs, less so banks. Okay, so how do we leverage the SACCO network to be able to speak to interface and roll out our financial literacy and investor programs to retail investors? Chamas as well is one of the big ones in Kenya. In fact, I will have you know that one of the teams I set up as soon as I joined the NSE is a team that wakes up every day to look after SACCOs and Chamas. And we are getting a lot of traction on the back of that. The other thing that we are accepting is that we need also to roll out investor education and financial literacy programs in languages that people are comfortable with. So we are looking at how do we engage, for example, with vernacular radio programs. How do we engage with even social influencers? Okay. You call them influencers. You can clearly tell I'm not a Gen Z. But the point is, how do we roll out financial literacy and investor education, for example, through TikTok, which is very popular with young people? The point I'm trying to make is that we are not just going to come up with these complicated financial education, financial literacy and investor education programs and hope that people will learn and hopefully come to our market. No. We are doing it in a tailored, surgical way, to the point where we've already started lobbying government for financial literacy programs to be part and parcel of the school curriculum. It should not be the case that you are going through primary school and you don't know how to manage money, what investment means, what NSE does. This is a failure. It's a big failure, actually, on our part. And we are doing that having done research on how other markets have done it. You start learning about investment and matters finance at an early age. It should be part and parcel of one of your life skills, so that by the time you're coming to the market, shall we say, maybe you're 18 and above, you're well equipped. That is when people will stop thinking betting is investing, because it's not, and instead invest properly, And Akshay has told you, the single biggest source of wealth for a long, long time on this planet has been stock exchanges.
It's not having a good life.
maybe in a different way. Now, okay. we think, just to complete the point, we think that the single biggest solution to enable mass adoption, mass rollout of financial literacy and investor education is using digital solutions, digital platforms. This is a solution. So that when you have 5 minutes, when you're not doing whatever you're doing, you can jump on your phone and learn what equities are, learn what real estate investment trusts are, learn what derivatives are, learn how to invest in bonds, learn how to trade markets, etc. So there's no doubt that digital platforms are the way to go. Other markets have actually done it that way. Why NSE? Why NSE? Look, as long as you're Kenyan, if I start there, and I'm not appealing to patriotism, but as long as you're Kenyan, if you wake up, brush your teeth, have your breakfast, drive or somehow find your way to work or to your place of business, pay your taxes, all that stuff, that money is being spent in this economy. 99% of all that money is going to companies listed on the NSE. It's a no-brainer. You're eating bread, you're smoking, you're having a drink, you're using data. These are companies on our exchange. You're taking loans from banks. Those banks are listed on our exchange. It's not rocket science. People have to invest in themselves. NSE is that. Now, if you are in a different country, that's a different conversation. But as long as you're in there, and by the way, just as a conclusion, the bulk of the companies listed on the NSE are doing business in at a minimum 6 countries. That tells you that actually you're not just buying a stake in the Kenyan economy and owning a piece of it and I've told you as of Wednesday last week, you can own a stake with just one share.
Yes.
It means that you are actually owning a stake in the larger Eastern Central Africa, because
Yes.
companies on our market are actually doing business regionally. Take example of what? Equity is in 6 countries. Safaricom, that you know very well, is now in at a minimum 2 countries, Kenya and Ethiopia. KCB, 6 countries, etc. The point I'm making is, I really do not think we should have a debate on why NSE. The question answers itself. Thank you. And I will need to leave in the next 2 minutes, please. Thank you.
Thank you, sir. I think that was very that was great. What you just said. I have no words. You said it's self-explanatory. It does not need rocket science in that sense. But thank you so much for joining us here today. Guys, if you had a question for Akshay Grover, for Frank Mwiti, or for Kariuki Gathitu in that sense, with regards to what they're saying, please make sure you drop it on the chat. If you need a chance to actually speak on video, please feel free to just share. But Frankie is about to leave us. Sir, we want to thank you so much for being here with us again. My next question will be to
Sorry, just to sign off. Sorry, I've put the NSE email in the chat, so guys can work through you, or feel free to email that email, that we will try and address your questions as best as we can. But listen, NSE is open for you. This is your exchange. I think you also can see that we are open to feedback, and we are really looking to act on that feedback. I wish I could stay more, but I need to drop off. Thank you for having me, and I'm looking forward to further participation in future. Thank you.
Yes. Thank you so much, sir.
Thank you so much.
Akshay, the second question was, how can partnerships, exchanges, and fintech and global investors as well be structured to make retail participation not only accessible, but also sustainable over a long period of time?
Is that with regard to stock investing or private investing?
We can do both, with regard to stock and private.
So, I think I guess retail participation in private and stock is kind of different, because the advantage of stock is that you're always investing in slightly more established companies, right?
Yes.
And I think that for people who are early in their life in terms of career and are not sitting on millions of dollars of family wealth, right? I think the place to invest is established company. Yeah.
Yes.
Because that gives you businesses that are quite well established, they have cash flows, they continue to have a sound fundamental established business model. The risks involved in investing in those equities, there's always risk with equities, but I think there's lesser risk relatively. So I think people who are not investing out of family wealth pockets are better off investing in stock market. Now the question is, what can we do? I mean, I don't know what fintech can do there. I guess it's really about technology, partly technology, about saying, hey, how accessible is the stock market investing in Kenya or Nairobi or in other stock exchanges in the region, etc. Right?
Yes.
And I think Kariuki was mentioning it earlier, of saying who's the Robin Hood
Yes.
of this region. And of
Yes.
course, I know that there are a few apps in the market that are already allowing for stock market investing. I'm not sure that they're focused purely on the local stock exchange. Some of them are also focused on enabling US stock investments and other things, right? To give investors diversity. So I think
Yes.
on that front, it's about tech development, but I'm not sure it's only about tech development. I think it's about access to more investing. As
Yes.
I said earlier, I know Frank's not on the call to kind of defend this right now, but
Yes.
the point is that there's not enough depth in the market. So if you're an investor, you're saying, hey, I don't want to put all my wealth into the Nairobi Stock Exchange because it is not necessarily representative of everything in the world. And so I want to invest, let's say, 30% of my wealth in high-tech stocks in the US. Yeah. I want to invest 30% into funds. I want to invest maybe 25-30% into Nairobi Stock Exchange or companies that are listed on the Nairobi Stock Exchange, right? So I think there is a little bit of tech, but then there's also a little bit about saying what's available to the investor to invest in, right? So I think both need to kind of develop from a stock exchange point of view. From a stock exchange investor retail participation point. Yeah. From a private investing point of view, I would basically say, hey, stay away, in short. High risk, high reward. Doesn't really work, but if you really enjoy it, then I would say figure out if you save $1,000 a year, then I would say allocate maybe $100, or maybe if you're really aggressive, $200 to private investing just because you enjoy it, right? Because you think that will work. And then when you invest $100 or $200, don't invest it into one company. Invest it into at least 10 companies. So you should be investing $20 into 10 companies to get to $200, right? So that's really what you should do from a private investing point of view. I don't think today that there are a lot of private investing groups. I mean, TI is one of them. There's Nairobi Angel Network. There are so many groups which are coming together to invest in early stage investment vehicles. And there are already quite a few of those. So, I mean, those are all opportunities which are available to do it. But I think the ticket size has to be small and commensurate to what risk you want to take.
Indeed. Thank you so much. And I believe Ty is under very safe hands going forward and is going to achieve some great things, even though you said the ticket size has to be small. I envision in the next 2-3 years, it will be bigger. And I think with the leadership, that's very possible. I'd like to now move on to KG, your final question as well. How can fintech and innovators collaborate with the Nairobi Securities Exchange to design retail-friendly products and experiences that will build trust and long-term engagement, in your point of view?
Yeah, that's pretty crucial question to ask and to answer. And I think it has three arms. There's first of all the people, right? The people in the ecosystem really define what solutions in the NSE look like, and in the capital markets generally. And you find these people are entrepreneurs, techpreneurs who are building for Africa. They're building for capital markets. They're building for financial services, fintech. And the first thing to really understand is mapping out who those people are, right? Where are they and what do they want? I think it's super essential to critically figure out what does a fintech NSE developer look like and what do they want and why do they want it? What sort of backgrounds do they come from? Are they are they finance backgrounds? Are they, have they worked at NSE? Do they understand the things that are needed in the NSE? And then the second thing I think is also process. Obviously, when you're connecting to NSE, and Frank said it's a transformed NSE, it's a new NSE, and we want to say that it is. We personally have seen the transformation, how hungry they are for solutions, connecting with Quikk to enable them to open up their markets, right? But then there is also a process around that innovation coming to light, right? And so it's really about figuring out what does that new process look like? How do we not give developers a barrier to entry? How do we not get them hitting the wall? They have all this excitement about let's build something. I want to build something like Robinhood. I want to build something like XNES. I need to build a robot trader. How do I do that, right? Then they go to the authorities or whatever they need to do, and then they get a wall. So it's really just figuring that out, the process around connecting and making it easy for people to understand that this is what I'm able to do. This is the current market that I can achieve, and this is how far I can go. And I think the third thing is platform, right? So platform is super important because you need a platform that will be always robust, makes sense, connecting, doesn't need a rocket science degree, enables the barrier for connection to be very, very low, so that innovation can thrive. And so when you're looking at those three things, when you have the people and the platform and the process, then it'll catalyze the number of people who are connecting, the number of apps that are connecting, the number of people who are really trying to get the NSE into people's minds, people's hearts. And so the end result is this initiatives working together. You'd find somebody is thinking about visibility, somebody is thinking about analytics, putting information together to give a retail investor the insight on what to invest and what not to invest. Somebody else is trying to figure out, how do you break this thing down into small chunks? How do we tell the person, fine, you're buying potatoes and tomatoes in the market, why don't you also buy 50 shillings of shares during this trip, right? And through that, technology will really accelerate. And I think it's the only way to connect, but there's a people part and there's a process part. Yeah.
Thank you so much, Kariuki. To everyone who's been able to join us today, has sticked around until this moment, I want to say thank you. From Forge Marketplace, we will continue to power such conversations and allow people to share their insight and engage with their audience, especially in tech, fintech, and areas around that. We're very grateful to have had Akshay Grover with us here today. We're very grateful to have had Kariuki, and also very grateful to have had Mr. Frank Mwiti. We'll be looking forward to having more conversations like this. We have had, for this series, Inside the Forge, 2 webinars prior to today. The first one was around the different players for a deal that we have signed with, signed or about to sign with the Nairobi Securities Exchange, unlocking financial data through APIs. So one party said what they do, other party said what they do, and we had a conversation. The second webinar, which was still Inside the Forge, was about the different players within the ecosystem in terms of stocks, sharing their experiences and how this will be beneficial to developers and different players in the industry as well. This one was about leadership from the different companies, and of course, insight from Akshay Grover from a capital markets point of view, with his ability to understand numbers and money, basically, to guide us in that sense and talk to us about it. And you can see through his feedback very quickly that it was very beneficial. So thank you, sir, for that. But from the 3 webinars that we've had for Inside the Forge with regards to this, it's been very, very exciting, very great journey. So I want to thank each and every one of us that has joined us here today. We'll be looking forward to having more conversations like these. Until then, from me, it is thank you. If anyone has a parting shot, please feel free.
And maybe just to add on that, I think the next steps for us is really, walking the journey to getting people connected, right? So if you want to, if you have any ideas, any thoughts around building something around the NSE and you need the APIs, or you want to, they're starting an innovation hub, and that has intrinsically, to do with APIs and developers. Please just reach out to us, and we'll be more than happy to, walk that journey, and hopefully to see your innovations in the market transforming lives in the NSE and in Kenya and in East Africa.
Akshay?
Thank you, everyone. Thank you for the invitation, and have a good evening.
Cheers.
Thank you, Akshay.
Bye, guys.
Bye. Bye-bye.